Should you use double leverage exchange traded products? Microsoft goes up 10%, you make 20%. Sounds attractive. Here are some of the problems with that strategy. Let's just have a look at the screen here. So double leverage, it's going to be worrying. The ideal, of course, is the stock goes up, say 17% or whatever. Now I've drawn here as an example Microsoft. Okay, it's broken out from this downward trend. We've got a projection from where it is at the moment that on a worst case, it's going to give you, say, 17, 18% within a year. And that's just projecting that forward to an upward trend line. Okay, and you might say, well, that's not going to happen, in which case don't do the trade. So that's your best case. And you would make, indeed, about 34% on a 2x exchange traded fund or a double leveraged exchange traded fund. Now, it's not going to be exactly 34%, but okay, so you make 33. What do you care? And of course, whether it's sterling or US dollar will make a slight difference, probably not too much over that period under most circumstances. Right, so we get that as the ideal scenario. So what's the problem? Why wouldn't everybody do it if they think that? In fact, why would I not necessarily do that rather than just own the underlying stock? And let's just have a look at one of the issues. This is a simulated log normal random walk based on historical parameters for Microsoft, Apple, and Google. It doesn't mean that the future is guaranteed to give these results, but what it suggests is that based on the recent past and how the stocks have moved, these are potential outcomes. So you had my projection of 17%, but what if actually here, the blue one is Microsoft, within a year you just ended up with a 0% return and the price moving up and down? Well, you wouldn't get a 0% return on your 2x leveraged exchange traded fund. In actual fact, you'd end up with less than that. Let's look at one other slide, not this one. This one is for you to make sure you follow me, like, subscribe, and have a look at alpeshpatel.com/links. Actually, the next slide I want to show you is this. In 12 months, the stock of Microsoft, let's just look at what's happened in the past 12 months to today, had moved up in 12 months about 2%. However, the double leveraged exchange traded product is down 11%. How's that the case? Surely it should be up 4%. Well, the reason is in the manner in which mathematics works and leverage works. The fact that to get to that 2%, it had to go up and down, up and down, up and down a lot meant that you ended up with a slight loss on the double leveraged product. So, as I said, the ideal scenario is, of course, it just goes up in a straight line. How often does that happen? Not very often. However, that's a risk I'd be considering as one worth taking. But I wouldn't bet the ranch on it. Now remember, double leverage is always risky. So this is only for sophisticated investors. And the caveat usually is that you wouldn't do it for a year, you'd do it for shorter periods of time. Why? Well, for the reasons I mentioned. If you did it for a year and you got all that volatility in between, of which there's an increased probability because it's a year you're looking at, then of course you've got a greater probability of also having a loss. And so these products were actually designed for shorter periods of time. So bear that in mind as well. However, if you're only investing for a short period of time, that in itself carries an inherent risk. Because, as you know, most people would say, if you've got a good company like a Microsoft or an Apple, Amazon, whatever, you should be holding for a longer period of time. So balance the two out. I generally would be a bit uncomfortable with a 1-year holding, but I'd also be uncomfortable with just a 1-month holding. That seems to be too risky for double leverage as well. So either way, balancing those two out and ensuring that you think, and you've got good reasons to think, the odds are in your favor. To work out which trades I like, which ones I'm placing, have a look at alpeshpatel.com/links, and don't forget to like, subscribe, and follow for more tips from a hedge fund manager. Thank you very much.